Plurilock just reported first quarter financial statements. I'm going to go over it, but first I'm going to do a short review of Plurilock. So this is the investment report that I wrote on Plurilock. If you didn't read it, the link to it is in the description below. But Plurilock is a cybersecurity company, and the stock is down significantly over the last 5 years, 97%. But it is a company with a revenue profile of 70 million per year, low gross profit margins. And the idea behind this company is to increase margins through critical services. So the reason why the company has low gross profit margins is because they are in the VAR business, value-added reseller. They are reselling other people's products, and they have a very, very serious clientele, and that clientele is being farmed for critical services, which carry higher margins. Okay, so that's the whole thesis behind Plurilock, is to cross-sell critical services, and those critical services have higher margins. If you have enough of critical services, you will become EBITDA positive, cash flow positive, and that's how the company intends to build a shareholder value. The clientele includes amazing clientele like Air Force, U.S. Army, clients like that. Recently, they did a private placement to raise some serious money. There was a reset. Lots of shares were printed. There was a rollback because the cash was low, and the company needed the cash to move forward with the plan. In terms of the gross profit margins, in 2023, they were 8.31%. Prior year, they were 7.7%. So it's an increase. It's an increase in gross profit margin. I'm going through this report so that you can relate to when I'm talking about Q1 numbers. We can go back to this report and see how they are progressing in relation to this report, which is the blueprint for how they're going to create value. Professional services is the fastest growing segment. As you can see, in 2020, professional services were only 742,000. In 2023, they were 2.8 million. And then prior year, they were like 300,000 or something. So 300,000, 700,000, and then almost 3 million. So you can see huge growth. And we'll see Q1 numbers and compare whether this growth continues and where we are with this growth. Because the growth in the professional services, as you can see, this segment in 2022 represented only 1.1% of total revenues, and in 2023 it was almost at 4%. We'll see where they are right now. So these are the main points that I want to address. Now let's have a look at the Q1 numbers. So Q1 numbers, the first thing we're going to look at is as of March 31st, 2024, this is the balance sheet. So on the balance sheet, the first thing you can see is the cash, right? Cash is very low. It significantly declined from December 31st, which was almost 2 million, to 600,000. And this is why they recently did a big private placement, raising 5.5 million, which of course is not being reflected on this because this balance sheet shows March 31st. So the money was raised after that, right? But the cash was low. It needed to be done. In terms of, long-term debt, they don't really have long-term debt. They have a convertible debenture of $1.2 million, and there was a press release as to, that some of the debenture is going to get converted. How much? I don't know yet. But debt is not an issue for this company. So let's move on. In terms of revenue, so what jumps out right away is that revenues declined from quarter to quarter. So in Q1, they were 15.7 million. In Q1 of this year, they were 11.5 million. Now, this is nothing to be alarmed about, because the CEO stated in the interview with me, because this happened exactly same thing in Q3 of 2023 versus Q3 of the prior year, the same thing. Revenues declined, and by the time the actual numbers for the whole year were reported, they were up. And as you can see here, in 2022 they were 64, and then in 2023 revenues were up, were 70 million. So even though revenues from third quarter to third quarter they declined, overall they increased because of the timing of orders. The orders can flow in and out of the quarters. So just because the revenues is down for this quarter means nothing. We're going to have to look at the whole year. And if the CEO didn't tell us this, that this is how the business operates, then we would probably be concerned. But in the interview with me, this is exactly what he said. You can't look at the quarter to quarter because some orders can flow in and flow out. And this is exactly what they said in the discussion. They said revenue for the 3 months is lower than the comparable period as a result of the timing on a few large orders and lower volume from Integra acquisition, offset partially by growth in professional services. So again, some of large orders didn't happen in Q1. They'll probably happen in Q2. So get used to that kind of volatility from quarter to quarter. Okay, so that's on the revenue side. Now we're going to look at gross profit and gross profit margin. So notice this. Gross profit for Q1 2023 was 2.1 million, and in this quarter was 2.5. So even though the revenue is down, the gross profit is up. Why? Well, without going any further, that's because gross profit margin increased. Okay, so now they made this chart that made us easier to understand. Gross profit margin. In prior quarter, it was, in a quarter last year, it was 13.6%. And look at this was here, 22%. Incredible growth in gross profit margin. So right there from this, it tells me that they are on track with the investment thesis. In other words, the whole idea behind this is to improve gross profit margin, right? By selling higher margin services. And so how does these two numbers compare to the investment report that I wrote? So this is for the whole year. Gross profit margin for 2022 was 7.7. For 2023 was 8.31. Now we are over 20% on this. But we were also better for the first quarter. So it looks like the first quarter, the gross profit margin is higher, right? Because for the prior year quarter, it was 13.6. For the year, it was 7.1%. For this quarter was almost 22%. For the whole year, for the whole year last year was 8.31%. But now, notice that the difference between these two numbers, 2023 to 2022, 2023, was not a huge difference. 7.7% to 8.3%. It's an improvement, but it's not a massive improvement, right? This is a massive improvement from 13.6% to 21.9%. So now we got to ask ourselves, why is there such an amazing improvement? Well, a part of the answer lies, again, in the professional services. Right here, professional services. So if we go back to my report again, professional services. Remember how I said in 2021, it was about 300,000. You can see here. Then it was 742. This was about 2.8 million. Professional services grew 275% from 2022 to 2023. Where is it for that newest quarter? So keep this number in mind. 2.8 million last year. Look at this. 1 million. 1 million for the quarter. So 2.8 million. 1 million times 4 quarters. They are on track to do 4 million in professional services. So from 300,000 to 740, 2.8, now on track to 4 million. So they told us that professional services has a long runway because professional services they have several hundred clients, and professional services, that's 2.8 million. I think it only came from like 10 clients. So they have a lot of clients that they can go and reach out for professional services, or turn clients that do not have professional services, or they call them critical services, turn them into clients that use professional services or critical services. So they are doing what they said, right? And because professional services, I don't know why it says professional services here, because they renamed it critical services, so they should be using critical services name here, but they're not. Maybe it's a mistake. That's why the margins are higher, right? So let's take a look at another metric. The metric that I'm talking about is how much of total revenues are professional services. In 2022, they were about 1%. They were about 4%. Let's take a look at how much they are now. So keep this in mind, almost 4%. So how much is 1 million? 9 divided by total revenue. 11,574, 930. Now we are up to 8.7%, from less than 4% to 8.7%. Improvement? Are they doing what they said they were going to do? Yes. Let's see. So this is 8.7%. Let's keep that in mind. What was it the same quarter last year? They were 3.8%, right? So 3.8%, almost 9% here. Progressing as they should. Also, the next thing in the investment report that I wrote was their goal is to become profitable by following this strategy. EBITDA positive first, then cash flow positive. How long it's going to take? I don't know, but that's the path. That's the goal. So where are we on that front? Well, if you look at the EBITDA here and adjusted EBITDA, it is negative 371,000. In the prior year, it was negative almost 1 million. So big improvement? Yes, it is. And that's, again, in a quarter that few large orders didn't come in. So on a lower revenue, they are not that far from EBITDA positive. So overall, it looks like Plurilock is on track. Let me summarize this again. What was the idea? Resell critical services to get higher margins and have critical services take up more of revenues so that overall gross profit margins grows, overall gross profit grows to a level where the company becomes adjusted EBITDA positive, then EBITDA positive, then cash flow positive. And based on this quarter, critical services continues to grow at a fast pace. Margins continue to expand. The percentage of critical services as an overall portion of revenues continues to increase. EBITDA loss continues to go down. So I would say I'm pretty happy with the quarter. The company is definitely on track to do what it said and to follow the investment thesis.